Good morning. I'm Gary DeWaal, and this is Bridging the Week for June 11th to 15th, and today is June 18th, 2018. Last week, a senior official of the Securities and Exchange Commission said that both Bitcoin and Ether were not securities and acknowledged that there might be circumstances when a utility token is not a security too. The same official, as well as the Canadian security administrators, each provide a list of considerations to help evaluate the nature of a digital token. Separately, CME Group brought a host of disciplinary actions, including one against the Commodity Futures Trading Commission registered introducing broker for its late reporting of block trades, and it also modified a summary access denial order issued a few weeks ago against a foreign broker that afterwards led to the issuance of guidance to all Futures Commission merchants regarding their handling of omnibus accounts. Summer in the Northern Hemisphere officially begins this week, so I can enjoy the last increasing days before they begin to get shorter daily. Let's get started. Last week, William Hinman, the director of the Division of Corporate Finance of the Securities and Exchange Commission, said that the crypto asset Ether is not a security. It may have been a security once, but not today. As a result, transactions involving Ether are not security transactions. Moreover, in a speech before the Yahoo Finance All Market Summit in San Francisco, California, Mr. Hinman also indicated that he could envision that certain utility tokens might not be securities. He said that such a conclusion might be appropriate, quote, where there is no longer any central enterprise being invested in, or where the digital asset is sold only to be used to purchase a good or service available through the network on which it was created, end of quote. Typically, utility tokens reference a digital token that has express functionality authorizing a holder to access or purchase assets based on blockchain technology. According to Mr. Hinman, when promoters raise money to build networks on which digital assets will operate, and investors purchase such tokens with the expectation of selling their tokens in the secondary market, an investment contract likely exists, which is a type of security under applicable law, requiring registration for the digital token to be issued and sold to the public, or a valid exemption. In these cases, investors are passive. Marketing is not ordinarily targeted solely to token users, and the likelihood of success of the underlying system is uncertain. In such cases, said Mr. Hinman, quote, the purchaser usually has no choice but to rely on the efforts of the promoter to build a network and make the enterprise a success, end of quote. However, a token that might have been a security at one point in time may cease being a security over time, said Mr. Hinman. This could happen when, quote, the network on which the token or coin is to function is sufficiently decentralized where purchasers would no longer reasonably expect a person or group to carry out essential managerial or entrepreneurial efforts, end of quote. According to Mr. Hinman, this is what happened to Ether, which initially was distributed through a fundraising and now has a quote-unquote decentralized structure. In evaluating whether a digital token is likely a security, Mr. Hinman set forth 13 considerations that principally evaluate the role of promoters, the expectation of digital token purchasers, and timing of the issuance of the digital token. Separately, the Canadian securities administrators also issued guidance regarding when digital tokens are subject to securities law and not utility tokens. Unlike Mr. Hinman's list of considerations, the Canadian security administrators' 14 fact patterns derived from actual circumstances were considered and provided its conclusions as to whether the relevant digital token was more likely a security or not. This is a very useful list. Check it out on the print version of this vlog at www.bridgingtheweek.com. A second futures exchange has cited EOX Holdings LLC within just a few months in connection with its handling of block trades and for failing to supervise its employees and agents related to such handling. According to a notice of disciplinary action by the New York Mercantile Exchange, from March 1st through May 23rd, 2017, EOX, a Commodity Futures Trading Commission registered introducing broker, misreported the execution times of various block trades and failed to have procedures to review block trades before and after they were submitted to the exchange for accuracy. Pursuant to an offer of settlement which was accepted by a Nymex Business Conduct Committee, EOX agreed to pay a fine of $75,000 to resolve the exchange's allegations. In December 2017, EOX agreed to pay a fine of $442,500 to resolve charges brought by ICE Futures US that from August 2013 through July 2014, it may have also failed to adequately supervise two of its employees in connection with their execution of block trades and handling of non-public customer information. Separately, the Chicago Mercantile Exchange modified its prior summary access denial order against Hana Financial Investment. Previously, the exchange banned the South Korean-based brokerage firm from all trading on CME Group exchanges for 60 days, except for liquidating orders, because of its alleged incomplete cooperation with several investigations from May 2017 through the present. CME also claimed that the firm may have improperly and inaccurately netted positions among independently owned and controlled accounts within omnibus accounts at several CME Group clearing members, causing the clearing members to inaccurately report long and short positions and impacting open interest reporting. This episode appears to have prompted the Joint Audit Committee to subsequently issue guidance to all Futures Commission merchants regarding their handling of omnibus accounts. Under the revised order, Hana may trade for its proprietary accounts, but nothing was changed regarding its handling of customer accounts. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWaal. Have a great week, and until the next edition of Bridging the Week, ciao.